Hey friends, and welcome to another session of technical analysis on the natural gas markets. It's been a while that I have done one of these sessions, been away for a few weeks due to personal reasons, but that now I'm back. We should be having the sessions going on every weekly from here now. And I might do thinking of potentially covering some other markets as well, but we'll see that in the future. But let's stick back to our natural gas analysis. And people who've been following me for a while here, know that I usually prefer to analyze the charts on daily, 4 hour, and an hour time frame. The hour being my most preferred one. So let's get back to the charts. Here we have the charts of natural gas, NG1, natural gas continuous contract, and we are an hour time frame. So on the hour time frame, you can clearly see the markets are in a bullish pattern. So this is an ascending wedge, which is a bullish pattern. Clearly, the market's making a new higher high and a new lower high here. This gap here, basically, this is a rollover gap. So you can see here some point. What is that date? It's some point, maybe the 25th, 20. Yeah, the contracts rolled over, and that's where we have the gap. And then we've reached the top of the channel as well, and then the markets tried, coming down here, trying to fill the gap, which eventually I don't see it has been filled. But you can look at here, it's a beautiful reversal pattern. You can see it, the pattern here. Let me just highlight here, take a rectangle. Okay, let me do a path here. So this is the pattern which I'm talking about. It's a very clear pattern. So this is not a good drawing here, not very good at drawing, but if you look at it, it's a clear inverted head and shoulder pattern, which is a bullish pattern. And the significance of this pattern is always at the bottom. So basically, if you've been watching my other videos on different patterns, the significance of the pattern is where it is created. So the inverted head and shoulder is a trend reversal pattern. Now because we are on the hourly, so basically it's if you look at this is a sort of an intraday trend reversal pattern here, and then thereon we have seen a move, a very aggressive move on Friday, I guess. And you can see roughly around markets moving from 2.72 to roughly 2.92, which is roughly around 200 pips. That's a good move in a day. So clearly a bullish sentiment at the moment on natural gas on an hourly time frame, until and unless the prices are moving in this ascending channel. We should be heading higher, clearly making a higher high so far. So you can look at the last high is here. Until and unless we don't break this high, the structure is intact, or we don't break this low, the structure is intact. I mean, again, that will be, if you look at the high and low, basically high and low of the channel. So until and unless we are inside the channel, we are clearly bullish at this point in time. That is on an hourly time frame. Let's do one thing. Let's go back and see the daily time frame, what the daily says, because I think the daily's got more information than that of 4 hour. We'll come back to 4 hour as well, but let's go and see the daily, what the daily says here. So let me reset the scale for the daily. So look at the daily here. So the daily basically has been forming a symmetrical triangle. If you look at it, this has been started to form from ages. So when I say ages, maybe some point mid of or towards the end of November-ish or early January-ish. So clearly you can see a symmetrical triangle forming here, and then a breakout here. Okay, so let me get rid of this channel there, and then look at this. So a nice symmetrical triangle has been broken out, and then it has been retested again here nicely. So far we have a probability that the markets should be heading up. Now the only challenge here we have is the first resistance here at 3.15, but that is still far away. I think the nearest resistance I think is this one here, which is 2.95956. So basically 2.96 is the first resistance, and then 3 is of course a psychological resistance there. But then if we clear out that, basically we will be try and getting this particular resistance roughly around 3.15. If we successfully close daily on 3.15, basically we will be heading for I would say a bigger move, which I think is roughly around 4.4ish or $4 move. So we will be trying to look at $4. So even with this symmetrical triangle, if you look at look at the targets, we are looking at roughly around $4, roughly early $4. Saying that, I just wanted to give a disclaimer: this is not a buy or a sell recommendation. This is purely for educational purposes. So if you are buying or selling, please consult your financial advisor. This is purely for educational purposes. So saying that, this is the level we need to probably have a close watch here. And then once we clear this, then here, and then 3.6 gets clear, then we are in the early 4 territories, which will be a good price to have for maybe the winters or early next summer. I don't know, but technically that looks like the markets want to head into the $4 territory. That's what the charts are telling me at the moment. One thing also we should note, this particular rising floor, which forms one part of a symmetrical triangle, this is forming a support here. So this support is a very critical one. So if you look at this, the market has been forming the support from February, mid of February. February is always mid February is always, I would say, the markets trying to achieve their first bottom. This is basically based on the charts which I'm seeing. So if you go back to this particular bit here, if you see 21st of February here, there is nothing to do with the date, but first bottom and then eventually second bottom and then rising high. So as you may know that natural gas is a cyclical market, so it basically dips and then makes a high in a year, and so on every year. It's a cyclical market. So this is the rising floor. So basically this is supporting the price, making a part of a symmetrical triangle. We have it broken out, and then it's trying to now make a new high. As I said, I'm expecting early $4 as the target. One may argue that we have seen sort of a breakout here as well, and then the markets, this is basically, when is this, the 11th of June, which was roughly 3.15. Yeah, one can argue this as well. It did break out here, but eventually was not able to hold the ground here, and then eventually had to come back down. So as we know, these are markets and anything and everything is possible, so we have to be very cautious here. So we'll have to probably, that's the reason I said we have to probably watch this area, and then once we clear this area, then the markets are basically trying to go and reach the early $4 scenario. There is a gap here as well, so it's basically potentially the market's gonna come and try and fill the gap. It is not necessary always that the market's gonna fill the gap straight away. They can whenever they can. If not, they won't even. So look at this gap. Did we fill this gap? No. So the gap is still here. So it's not mandatory that the market's gonna fill the gap every now and then, like we have to fill the gap before moving ahead. It's not compulsory as such. They will fill the gaps, maybe not, if not now, in the future, near future. There are gaps as well. So at some point, at $9 price, maybe that was back in 2022, if I'm not wrong. So those are unfilled as well. So as I said, that gaps will be there on charts and will be filled by the markets, but it's not mandatory. They will always fill it. They will fill it as and when they want to. Saying that, let's go back and see the 4-hour charts. The 4-hour charts, it's nothing new, saying the same story here. So clearly, look at this breakout, retest, moving ahead, and then exactly, saying the same story that was on the daily. Let's go back to hour. Hour is nothing interesting. This is a channel which we deleted. We can try and create the channel again. So there you go. That's it. I think that's pretty much, I think, for this particular weekly analysis. One should follow the hourly time frame to get the near term movement. As I said earlier, in the beginning of this video, the first indications will be the channel here. So if we break down the channel, we are definitely bearish on the time frame, so near future. If we break out of this channel, we're going to be super bullish for sure, but we will leave that to the markets to decide what they want to do. But we just keep our analysis going and see where we hit for the next week. Saying that, yeah, that's pretty much on my side for this week. Appreciate if you can let me know in the comment section, how did you find this video helpful. If so, give us a thumbs up, share and subscribe to our channel. Thank you for watching, and I'll see you in the next week.